The stablecoin market capitalization stacks up to over $170 billion today, a drop in the bucket in what is expected to grow to a multi-trillion-dollar industry. Stablecoin issuer Paxos is increasingly building market share through its growing list of Paxos-issued assets that include stablecoins for PayPal, Binance, its eponymous Pax Dollar, and more. Joining us to discuss is Charles Cascarilla. He's the CEO and co-founder of Paxos. Welcome to the show, Charles.
Great to be here. Thanks for having me.
So I understand you also have an announcement at the conference.
Yes. So we're really proud to say that the Paxos family of stablecoins will be coming to the Stellar network. We think this is very exciting given the reach and global nature of what Stellar represents and the ecosystem that it has. We're excited to be able to bring some of our dollar stablecoins, also our gold stablecoin, the whole family to this ecosystem.
How do you think a stablecoin on Stellar will be used regionally? What are you seeing?
Well, I think stablecoins can do two things. One is democratize access to dollars. Everybody wants dollars. Dollars move basically like mail in the post office right now. But everyone wants a dollar. They want to be able to have it move 24/7 instantaneously, low cost, programmable. And if you look around the world, more people have smartphones than have bank accounts, which is also kind of completely crazy, really, at this day and age. Smartphones have been around for 15 years. Banks have been around for hundreds and hundreds of years, but it's not creating universal access. Stablecoins have that ability to create universal access for dollars. And also, you can start to have yield where you pass on the T-bill return that's backing a stablecoin, and you can democratize access to interest. And I think that's very, very powerful for people who live in currencies and countries where there is a lot of destabilization in terms of the value, but also the inability to have what is very safe yield that you're generating.
Can you go into that a little bit more, Charles? I think that people don't they underestimate the power of yield on both short-term and long-term opportunities, especially around stablecoins, because it's not only that you get usage and the ability, especially in an emerging market where you can take out at the highest value at that moment in need, but the fact that you can sort of compound it, right? And what that can do to transform a locality or a charity. I think that if you could just give us a little bit more insight on why yield is so important.
Well, the first thing someone wants if they don't have access to it is a dollar. And then once you have a dollar, you're trying to think, well, what can I do with this? And there's lots of things you can do with it. Of course, you could go buy crypto. You could participate in the DeFi lending ecosystem. But if you said, I just want to have the safest yield possible, you can't do that today. You can't just go very easily buy T-bills. If you're a retail person, you have $100 of stablecoins. Certainly, if you could get a bank account and you have $100, you can't get the risk-free rate. But now you can. We have a product called the Lift Dollar, USDL. It's regulated out of Abu Dhabi by the FSRA. It is bankruptcy protected. If anything happens to Paxos, your funds are safe. And you can now get the programmatic risk-free rate paid to you daily. Every single day, it just accrues in your account for not having to do anything. And it's freely sendable, not in the U.S., but freely sendable, just like a stablecoin. And that's an important foundational asset for anybody to be able to have access to who wants to be able to have security from a financial perspective, but also be able to generate income and generate return without having to have the opacity or the real sophistication that you need when you start to get into the DeFi ecosystem and having a lot of complexity in how lending works.
So in the stablecoin business, my understanding is that it pays to, the business model pays to be big to generate yield. So if you're creating multiple or all these stablecoins for different companies, does that impose upon that business model at all?
Well, I think their stablecoins are in some ways like a network, and in some ways it's like a loyalty program. And so there's not going to probably be thousands of stablecoins. There's not going to be hundreds of stablecoins. There'll probably only be maybe 2 or 3 very big stablecoins. But I think there's a real logic for certain types of companies to have their own stablecoin. Either because they have a really big internal network, like, say, PayPal, or it could be that you want to have loyalty programs and other things that you make available for internal network or internal usage. And there'll be a lot of discovery in the product market about how someone is able to get to scale versus how someone is maybe just using this as a way to broaden their connection, just like, say, Target does with their credit card, or you've seen this in a lot of other institutions. It is something that's very logical. You
mentioned PayPal, so I want to get into the privacy concerns around that, because folks were concerned about how PayPal could potentially freeze their accounts or wipe their balances. Is that something built in at all? Should people be concerned?
Well, I mean, look, stablecoins are set up where there's an issuer. In this case, it happens to be Paxos. By the way, it could be Tether, it could be Circle, and everyone is sitting here trying to comply with rules and laws, and the stablecoins move freely. If some jurisdiction came and said, you know what, someone is using a stablecoin illegally, you have the ability to protect the integrity of that token through a mechanism like seize and freeze. And I think everyone has it. Everyone's done it. Tether's done it. Circle's done it. We've done it. That's a lot different because you're getting it from a lawful jurisdiction than if some company has terms and conditions. And so you want to make this dollar move as freely as possible so that there can be a lot of trustworthiness with it. That's why we create regulated stablecoins. We're the only issuer where we're have primary regulation on top of us. That's different than every other issuer. And we do that because you want to create trustworthiness that allows it to scale to societal-wide usage. And part of that is making sure that someone who has it in their wallet can go use it whenever they want.
Charles, I know you have to run, so I'm going to try to make this quick. I have a 22-year-old kid. Christine has a young child. Both of them are barely ever going to touch cash, right? So when you think of stablecoins and really digital money in the future, do you see that this is where it's going to go? Or do you see sort of traditional finance trying to fight back and saying, no, we want to own the monetary systems or governments? I mean, I feel like stablecoins are the answer here. But I just wonder your thoughts when you look 5 years in the future.
Well, I think the interesting thing about blockchain is that it's enabling an open financial system that can move like the internet. And I think the traditional financial system is an intranet. And this is an old way of doing things where you have a closed network. And the power of open systems is that it creates innovation and openness and inclusion, of course. And so that's why I think stablecoins are so powerful, because you now have a new way of being able to move money around that fits with the modern economy. And I think that's something that isn't in opposition to traditional financial institutions, but it's in opposition to the way traditional financial networks have operated, because you're in a closed system and you can't join it unless you're let in. And even then, those networks are written in old ways and they're not programmable. Taking a dollar and being able to make it so that anybody in the world can have access to it changes, well, one, I think the position of the dollar, but also changes the financial position of almost the whole world, because so many people are unbanked and underbanked. In the U.S., it's actually 25% of the population is unbanked or underbanked by the Federal Reserve's own surveys. Mm-hmm. And outside of the U.S., it's something like 30 or 35% of people. I mean, this is a huge amount of people who don't have access. But I was talking about how people have smartphones. You can have a smartphone, you don't have access, now you do. And that is a game changer for the world. And how people can lift themselves out of the whatever financial position that they're in. I have friends who, in certain countries where they've had their savings wiped out multiple times in their life. We don't necessarily always think about that if you're in a large country or a G7 country, but it's true, and that's what happens. This is what stablecoins are here to solve.
All right. Charles, I know you got to run, but thank you so much for
Great to be here. Thanks for having me.
That was Paxos CEO and co-founder Charles Cascarilla. After the break, we'll have more from the Stellar Meridian Conference.